Hey guys, so welcome back to the channel. Today I have a new trading strategy which I'm going to backtest for you over 100 trades. I will first tell you about the indicators we're going to be using, show you a few examples, and then perform the 100 trade backtest. This strategy involves two trading indicators, the exponential moving average and the relative strength index. So guys, if you want to support this channel and receive exclusive access to all the strategies we've backtested so far, please check out our Patreon's page. We will have a Discord live chat which you can use to ask any questions to the community. The first 30 people joining the middle tier will automatically have full access to the top tier at no extra cost, allowing you to send a strategy for me to backtest. I saw a few of you have already joined, so thank you so much. I will create a video similar to this one you're watching and present everyone with the results. So please consider having a look at the first link in the description, and I hope to see many of you on the Discord community. So an exponential moving average, also known as an EMA, is a type of moving average that places a greater weight and significance on the most recent data points. The exponential moving average is also referred to as the exponentially weighted moving average. So an exponentially weighted moving average reacts more significantly to recent price changes than a simple moving average, which applies an equal weight to all observations in the period. And the second indicator is the relative strength index, also known as the RSI. It's a momentum indicator used in technical analysis. The RSI measures the speed and magnitude of a security's recent price changes to evaluate overvalued and undervalued conditions in the price of that security. So this backtest is based on the daily time frame on Euro USD. So here's the strategy. We go long if the price is above the 200 EMA and the RSI enters the 0 to 30 zone, and we go short if the price is below the 200 EMA and the RSI enters the 70 to 100 zone. For long positions, we exit when the RSI crosses the 40 level, and similarly for short positions, we exit when the RSI crosses the 60 level. But for long positions, we exit when the RSI crosses the 40 level, and for short positions, we exit when the RSI crosses the 60 level. The second rule is that we place the stop loss at 1 ATR based on the stop loss ATR indicator we're going to be using. Then we do not have a maximum number of trades that we can have open at the same time. And so we will use a variable risk to reward ratio. And the final rule is that when the open profit reaches 1R, we move the stop loss by 1R. But let's get on the charts now so I can show you a few trades and then we'll dive straight into the backtest. All right, guys, so here we are on the charts on the daily time frame on euro dollar. So we'll go ahead and add the indicators. So the first indicator is the exponential moving average. And the second indicator will be the RSI, and the last indicator will be the ATR stop loss. So you want to get the one from Gareth Yeo, and so let me show you the settings. So for the EMA, you're going to want to change the inputs length to 200 and then change the method to EMA. And for the style, you can choose whatever color you want. I just, as usual, I like it thick and then in a light color. Then the RSI settings, we can remove the fill. Then it's up to you, but we're going to remove the fill and the RSI based moving average and change that to white as well. And then for the inputs, we're going to change the RSI length to 10 and then click OK. And finally, the ATR stop loss, you're going to want to keep the same values, so 14 period and a multiplier of 1.6. So let me show you some examples before I show you. So for short positions, you want the price to be below the 200 EMA and the RSI to enter the 70 to 100 range. So in this case, you would have gone short. And for long positions, you want the price to be above the 200 EMA. So here you would have gone long after this candle because the price is above the 200 EMA. The RSI entered the 0 to 30 zone. So you go long on this candle. You're going to put the stop loss at the previous candle's ATR stop loss, and you will close the position when RSI reaches 40. Essentially, in this case, it would have been a break-even trade. So in this case, you would have closed your position right here. That would have been an almost a 1-to-1 1 risk to reward ratio. Similarly, you would have gone long right here on this candle, put your stop loss at the previous candle's ATR stop loss, and then you're aiming for the 40 level, which breaks after this candle, after that big green candle. So that would have been a 0.74 trade. So let me show you a few examples and then we'll dive straight into the back test. All right, guys, so here are a couple of examples. Apologies, the RSI setting is actually 5, not 10. So apologies for that. So here the price is lower than the 200 EMA. The RSI crosses the 70 level from below, so we go short. We place a stop loss at the previous ATR stop loss, and we close the position after the RSI crossed the 60 level, which in this case is after this candle. So basically we close the position at this level. So that is a small profit, 0.28. Then 2 weeks later, we enter another short after this candle. Right here, we place the stop loss at the previous candle's ATR stop loss, and we close the position for a 0.67 profit. Similarly here, but that is a very short profit, and here as well. Further down here is the same. So I think this strategy has a really good win rate, but let's see how the backtest performs in terms of net profit and percentage gain, and I'll see you for the results. So there you go, guys, the results on Euro USD. We had a maximum drawdown of 15%. We were risking 5% per trade. We had a variable risk to reward ratio. We had an amazing number of wins of 72 out of 100 and 28 losses with a maximum of 7 wins in a row and 4 losses in a row. So that gives a win rate of 72% over 2,000 days, which is around 6 years. So over 6 years, you would have made almost 72%. So if you would have started with $10,000, you would have ended up with $17,000. So this strategy is a great long-term strategy. You know, it's a bit more than 10% a year, which beats, you know, the stock market. The volatility is relatively low. As you can see, you've got a maximum of 15% drawdown. So there are not a lot of trades over 6 years, obviously, but you know, these trades are high probability trades. You know, 72% win rate is pretty amazing. So let me know what you guys think in the comments, and I'll see you in the next video.